Good morning, India. We are talking about the Economic Survey 2022. Some of you had written back to me after my last video on Jan 30th, where I had covered what is the Economic Survey, what is its significance, what is its importance. You had said mixing up English and Hindi is confusing you. So I am going to record the video on the actual Economic Survey 2022 in Hindi as well as in English. So this is the English version for all who are more comfortable with English. The slides are in English. Even for the Hindi video, we'll use the English slides, but I'll be talking in Hindi. So if you're more conversant with Hindi, you're most welcome to see that video. And this video is for the English speakers. So we'll be talking about the significant developments that happened in the Economic Survey 2022, which was presented by the Economic Division of the Department of Economic Affairs of the Ministry of Finance. So it's every year prepared by the Economic Division. I have a video which gives the entire background on the economic survey. You can have a look at that as well. It's in English and Hindi in the same video, and the slides there are in English, so it will be easy for all English speakers. Today I'll be talking about the significant data points and their their importance to us as analysts, as market players, as investors, and as well as citizens of this country. So this is the snapshot offered by the Economic Division. This is from the government's website itself, from the Publications Division of the Government of India. We'll be taking each of these slides in depth in the subsequent presentations. But overall, if you look at this, you know, we talked about GDP growth, which is making India one of the, uh, which is, excuse me, which is making India the fastest growing large economy next year, both in 2021-22 as well as 22-23. As you know, the financial year in India is from April 1 to March 31st. So that's why 2021-22 refers to the financial year from April 1, 2021 to March 31st, 2022. So we are in the midst of that year. The projection is 9.2% for that. And for next year, it's a range of 8 to 8.5. We will talk about why this range has been given. There is a host of data on the fiscal deficit, on the inflation outlook, on the foreign exchange reserves and the external sector of India. And then segment wise, how is the industry doing? How is the services doing, which is a big portion of the Indian GDP? And how is agriculture and related sectors performing? So those are the key factors that we'll be discussing in depth in today's presentation. So the first is the overall GDP outlook. From a 4% growth in financial year 2020, we saw a negative growth at the height of the COVID because of the complete shutdown of the economy in March 2020 and the deep impact the COVID had in that financial year. We had a negative print for the Indian economy. After a number of decades, we actually saw a negative print for the economy, but the recovery was very sharp as well. In some sectors, it was a very sharp V-shaped recovery, and overall for the economy, we'll say it's a K-shape where most of the economy recovered very well. Some segments leave a problem. We'll discuss a bit about that. But overall, the economy, thanks to the actions of the government, of the monetary authorities at the Reserve Bank of India, all of them came out with a lot of stimulus for the economy, and that ensured, like global economies, we bounced back very sharply in 2021-22, which is the ongoing year. This video is made on 4th of Feb 2022. So we are in the midst of this year, and next year we are expecting this growth to carry on as we emerge from the pandemic and move forward. So overall, GDP growth has been very good. The good news is, in nominal terms, the economy has come back to the 2019 production levels. So the GDP in nominal terms is already exceeding. So we have done a catch up. We have lost 2 years to the COVID as an economy in India. We are about 1.5–2% more than what we are there. But the good thing is, over 2023 and beyond, we are hoping to catch up with the trajectory that we were already running for at the end of 2020. And if the COVID had not come, that kind of trajectory we would have been running towards. We are hoping to catch up with that in the next 2 years. But overall, keep in mind, India grows as the fastest growing large economy in the world in this year and next year. That has implications for corporate growth also. So we are looking at about 11–12% nominal growth next year. And against that, the listed corporates, we are expecting to grow at about 15–16% in terms of their profits or bottom line. So it's a strong economy, and the markets are well positioned with the corporate earnings positioned to grow pretty fast. In 2021-22, we saw a nearly 30% growth in corporate earnings on the back of the sharp recovery that the economy saw, and the listed companies were much higher than that at 30%. And next year we are looking at another 15–16% growth in the corporate earnings. So to talk about the state of the economy, what the economic survey mentions, Indian economy estimated to grow by 9.2% in real terms in this year, 2021-22. Factors to support the growth further in 2022-23 at that 8–8.5% growth that we are forecasting. Widespread vaccine coverage. As of today, nearly 167 crore vaccine shots have been given in India. We'll talk about that a little later. But it's a huge coverage, one of the largest in the world. And now it's being rolled out to the youth as well, the under 18s. And we are expecting that even younger segments of the population will get that. Booster shots are being given to frontline workers and to senior citizens with comorbidities. So the third vaccination shots are also on. And we have a lot of other alternatives coming in, like nasal sprays as booster shots. Things like that are also coming in. But widespread vaccine coverage has helped India. One estimate is that in the Omicron variant in India, which started from November end, we saved maybe 100,000 Indian lives because of the widespread vaccine coverage. So nearly 100,000 lives would have been saved thanks to the spectacular efforts that have gone in terms of vaccinating the entire population. Second is the gains from the supply side reforms. The government's focus was on unshackling the supply side. They did give a safety net on the demand side, but a lot of focus has gone on the supply side reforms, the Atmanirbhar Bharat, the PLI schemes, the manufacturing companies tax cut, the corporate tax cut that came in. It was all focused on ease of doing business and also making an enabling environment. So all that is helping the economy grow very fast. Easing of regulations. We are a startup nation. We are the third largest startup economy in the world now, with huge numbers of startups coming in on a monthly basis. Robust export growth. We have seen 20% plus growth in exports, both goods as well as services. That is helping us a lot. Again, the targets are very huge. The potential is very huge. The China plus one strategy, the PLI schemes, the manufacturing stimulus, all these will work towards creating a more robust growth environment. And ramped up capital spending. The government has ramped up its capital spending on a multifold basis, where a few years back we would spend 2.5 lakh crores every year on capital spending in the central government budget. This year we are looking at about 7.5 lakh crores. So we've gone up nearly 3x over the last few years. That is giving a huge multiplier effect, and this capital spending is going into infrastructure creation, which in turn creates its own multiplier and its own economic benefits for the economy. Going forward, as the economy recovers past the pre-pandemic level, India is projected as the fastest growing major economy in the world. GDP is projected to grow by 8 to 8.5% in the next year, financial year 2023. The World Bank projection is about 8.7%. The ADB, Asian Development Bank, is projecting 7.5%, and the IMF, in its World Economic Outlook released in end January, is projecting a 9%. So the economic survey is a little conservative, plus it's giving a range between 8 and 8.5% as the growth imperative for next year. So we have covered the GDP growth. Let's go ahead to the segments. Firstly, the industry, the spine of the economy. The growth rate of the gross value added at basic prices in percent, if you look at, we were at about 5.3% in 18-19. There was an incipient slowdown that was coming in March because of the lockdown. We saw a sharp fall which brought down the entire 2020 number to a negative print. It became a hugely negative -7% in the full year 2021 because of the COVID lockdowns and the economy getting a lot of supply side constraints. But there has been a sharp pullback in 2021-22, a sharp recovery where we have seen 11.8% growth on the industrial side. So spectacular growth of 11.8. What all has helped here? Industry and infrastructure, achieving the Atmanirbhar Bharat, the self-reliant India. IIP growth at 17.4% during April to November in 2021-22 compared to minus 15.3 year on year. So the index of industrial production has seen a sharp growth. All-time high net profit to sales ratio for large corporates at 10.6% in quarter 2 of 2021-22. As I mentioned, the corporate India grew their earnings by nearly 30%, and some of them had very sharp recoveries. And we are seeing on an economy-wide level, the net profit to sales ratio went to 10.6%. 30% increase in road construction from about 28 kilometers per day of highway construction that we used to do. It has reached 36 kilometers per day in 2021. So despite the COVID, the infrastructure focus kept on, and it's very commendable that this kind of infrastructure is being created. Capital expenditure of Indian Railways budgeted to increase 5 times over the 2014 level to 2.5 lakh crores. So this is just the Indian Railways. Overall in the economy also, it's a multiple times growth. PLI, production linked incentive schemes, have been introduced to scale up key industries in 14 areas already we have seen. Major boost is provided to physical as well as the digital infrastructure. So the government has been looking at debottlenecking not only the physical, but also we are leapfrogging straight away into the not only into the physical, but also leapfrogging into the digital infrastructure. A lot of initiatives have been taken on that side as well. Coming to the services sector, which is the core of India, has more than half of the GDP related to services. We saw it was a strong performer in 2018-19, 19-20, fell off largely because the contact intensive industries saw a very sharp contraction due to the lockdowns because of the COVID. Entire tourism industry, travel, transportation, hotels, dining, all these industries, the retail shopping, all these industries took a severe knock in 2020-21. But the good news is there has been a sharp recovery already happening despite the second wave, despite the third wave of Omicron striking the economy. We have seen sharp recoveries coming through. So looking a little more deeper into the services sectors, 8.2% growth expected in the overall services sector this year. Muted response of second wave shown by high frequency indicators like the PMI index and the air and rail freight. 21% growth in services exports in the first half of this year surpasses the pre-pandemic level. This is helping the country a lot. $16.7 billion FDI in services sectors, 54% of total FDI flows. So a huge amount of the FDI that's coming into the country is also coming to the services sector. That's a good thing. India's share in world commercial services exports increased to 4.1% in 2020, very commendable. With 14,000 new startups in this year, India is now the third largest startup ecosystem in the world. We are seeing a lot of entrepreneurs coming in health tech, fintech, edutech, enterprise tech, SaaS, platform companies, all digital enterprises, huge amount of initiatives coming in with lot of funding also following in that segment. Major reforms included removal of telecom regulations in the IT and business process outsourcing sector and opening of the space sector to private players. So India becomes one of the few countries in the world which will have a very strong space sector also populated by strong private players. 44 Indian startups achieved unicorn status in 2021, taking the total to 83 unicorns, which is like a market cap of or valuation of more than $1 billion. We had a lot of decacorns as well, which are like $10 billion plus in valuation. Quite a few of them also came to the IPO market. We will discuss that shortly. Coming to where most of India resides, in the rural economy, we have seen that the rural economy did not get that strongly impacted by the COVID. That was the resilience of the rural economy plus the government. The government through the Jan Dhan scheme, where bank accounts were opened for nearly 44 crore Indians have been brought into the banking system, and now direct benefit transfers are happening. So what Nandan Nilenkani coined the word JAM, Jan Dhan accounts, along with Aadhaar authentication and the mobile payments. That has really energized the entire country and brought the rural economy into integration with the whole country. Good news is that the agricultural and rural economy grew at 3.6% this year and is forecasted to keep growing next year as well. In terms of food grain production, we have had bumper years back to back, and despite an uneven distribution of the monsoon due to enhanced irrigation methods as well as enhanced other measures, we are seeing bumper production on our agricultural front, which is very commendable. So we have covered the GDP growth, we have covered the segment-wise industry, services, agriculture. Let's now look at the finances of the government, the external assistance that's of the external sector, as well as the outlook for inflation before we conclude this presentation. So in terms of the fiscal deficit, we are seeing that as percentage of GDP, it went up to 9.2% in 2020-21. One part was the enhanced focus that the government brought in terms of providing a safety net to the affected segments of the population, especially the farmers. Farmers have been under the PM Kisan Yojana, the Prime Minister's farmers schemes. They have been given a huge amount of 1.8 lakh crores, and food subsidy, fertilizer subsidy, LPG gas subsidies, kerosene oil subsidies, all these have helped to create a safety net. Plus we had a direct food application to the nearly about 70 crores of the population has been given food grains and foodstuff at very highly subsidized rate, and that has helped that to ensure that there has been no starvation, there have been no cases of people not having enough food available. Plus what the government did last year was bring a lot of off-balance sheet items onto the balance sheet of the country. So this spike in fiscal deficit was twofold. One was the increased expenditure on welfare measures as well as on capital creation, on the capital formation of infrastructure, defense, railways, plus a lot of the off-balance sheet items which formally would not come in the budget process, but we as analysts would always add it back. That has now come onto the balance sheet. So it's a more transparent balance sheet that we saw. What is commendable is in 2021-22 already there is some normalization to 6.8, and in the recent budget on February 1st, the finance minister has taken a target of 6.4, and the glide path is that over the next 3 years we will bring it down to 4.6%. So very good progress happening on the fiscal deficit front as well. What are the fiscal developments? Economy bouncing back with India's agile policy response. That's the word the government has been using, that we have been very agile. Whichever segment, whichever sector has needed benefits, we have run to provide that in a very agile format. Excuse me. Revenue receipts have gone up by 67% this year. The tax, both on the indirect tax as well as the direct tax for individuals and corporates, despite the huge tax cut in corporates, because of the robust growth in the economy as such, we have seen revenue receipts going up much higher than target. Capital expenditure also has grown this year by 13.5%. So that's very good that money is being spent in the right way. Fiscal deficit contained at 46.2% of the budgeted expenditure. This is as of November. With the recovery of the economy, government debt is expected to decline. We are at about 91% is the ratio of government debt to GDP. we are hoping that as the GDP denominator expands, this government debt to GDP ratio will keep coming down in the future years. Several off-budget items have been brought within the budget allocations. As I mentioned earlier, state government's capex has gone up by 67%. So India is a federal structure. This is the central government's balance sheet, and there are states which have balance sheets and what we call the GSDP, gross state GDPs that we look at, and the capex at the state level has gone up by 67%, which is highly commendable. Coming to the monetary indicators, monetary management and fiscal and financial intermediation, year-on-year bank credit growth has increased by 5.3% to 9.2%. So, where it was running at 5.3%, the credit growth, now the year-on-year growth has gone to 9.2, which is most welcome. We have a direct correlation of credit growth and the economy growth and the consumption growth, so that's something very commendable. Gross NPAs of the state controlled banks have gone down from 11.2% 3 years back to about 6.9%. Net NPAs, because of provisions, because of selling off, because of taking these large defaulters to the bankruptcy court, to the IBC process, net NPAs have declined from 6% to 2.2%, and they will decline further. So the twin balance sheet problem of India, where corporates were highly leveraged and banks had very huge bad loans, the twin balance sheet problem has been largely resolved over the last 5 to 6 years. And despite the COVID, this is very good that NPAs are coming down. It's showing companies have been able to deleverage, and companies through cost cuts have been bringing down their leverage overall. Capital to risk-weighted asset ratio of the state-owned banks has gone from 13% to as high as 16.5%. So well capitalized, and that is a precursor to credit growth. Once banks have good capital adequacy and lower bad loans, they will have the confidence to lend more. Liquidity in the system has remained in surplus. RBI was very clear. In March 2020, it acted with a lot of agility and alacrity, brought in a lot of liquidity into the system, and in fact, since October, it has been mopping up some of the excess surpluses. But the system stays surplus, so RBI has ensured that liquidity has never been an issue for the economy in these COVID days. Credit to agriculture sector has registered robust growth as well. Monetary management and financial intermediation. How did the markets perform? We had a bumper year in terms of initial public offers in the equity markets. Nearly 89,000 crores was raised by 75 issues. Indian markets had again a spectacular performance in calendar year 2021, and it outperformed all its peers. Emerging markets in fact had a negative year, but Indian markets had a huge outperformance and performed very strongly over this past year. The economic survey points to the need for standardized framework for cross-border insolvency, for increased access, recognition, cooperation and coordination. So this is one of the inputs that they have put in terms of need to standardize the framework for cross-border bankruptcy and protection of capital. So we have covered the GDP growth, industry, services, agriculture, fiscal deficit. Let's now come to the foreign exchange, the external sector, and also cover the inflation. So coming to the inflation, inflation is a global issue from Turkey, which has 40% plus inflation, to Brazil, which is running at 10% plus inflation. Russia has a high inflation. India is in the middle with consumer inflation of 5% plus for multiple months, and wholesale inflation, a producer price inflation of 12%. What that is really showing you is that because of the way commodities have run up, and India being a huge importer of commodities, starting with oil, where 84% of India's crude oil requirements are all imported. And as oil went up 55% in calendar year 2021, we are seeing the impact. Two metals, two food grains, everything has combined to have a very high inflation in India as well, in line with the global. If you look at European Union, they are seeing 5.1% in January 2022. UK is forecasting a 7.25% consumer inflation in April of 2022, going up from about 5.5% right now. US is running at 7% consumer inflation, which is expected to go up further to about 8% over the next 2 months. So India is very much in line with the large economies in terms of a very high inflation number, which is worrisome for the government as well as the central bank. Average headline CPI reduced to 5.2% from 6.6% last year, despite the 55% increase in oil and nearly 20 to 30% increase in other commodities. Food inflation has been reduced down to 2.9%. That is very commendable. Government took very strict measures on controlling the food inflation. Effective supply side management kept prices under control. Proactive measures were taken to contain food prices like pulses, edible oil. Edible oil went up 60% globally. So to have managed that food inflation at that kind of a number is something that's worthy of, we can appreciate the efforts of the authorities concerned. WPI, the producer prices whole price index, increased to 12.5%, attributed to low base in the previous year, pickup in economic activity, sharp increase in international prices of crude oil and other imported inputs. I've covered that already. And high freight costs, again linked to oil prices. Overall, oil becomes a huge cost push inflator for the whole Indian economy. And there is very little that the government can do when oil goes up. Either we take it as a subsidy and protect the end users, or if we pass it back, it creates a huge inflation. Just to give you an idea, in our CPI number, in the consumer price index number, oil price is about 4.5%. So a 10% increase in oil price means nearly a 0.5% increase in consumer inflation. In the WPI, the oil price is about 9.8%. So a 10% increase in the oil price leads to nearly a 1% increase in the wholesale price index. That's the back of the envelope calculation you can keep in mind. 0.5% for consumer inflation and 1% for wholesale price inflation on every 10% increase in oil price. And we saw a 55% increase in oil price over the last year. So you can really see where the huge inflation really came, and it's global, not only India, but it's a global phenomenon that we are seeing. So we have covered GDP, the three sectors, we have covered fiscal deficit, we have covered inflation, and now we've got the external sector, and then a couple of slides on the overall outlook that the economic survey talked about. Coming to the exchange. External sector has seen resilience and growth. Merchandise exports and imports surpassed the pre-COVID level. We should do about $400 billion of merchandise exports this year. Significant pickup in net services, that's huge. Net capital flows at $65 billion in just the 6 months, April to September of financial year 2022. So we can expect a full year net foreign direct investment of more than 120 to 130,000 billion dollars. Balance of payment surplus of 63 billion in the first half of 2021-22. Forex reserves have touched an all-time high of 633 billion as of December 31st. India is now the fourth largest holder of Forex reserves. We have a cover of 13 months of our import bill, and it's as large as our total external debt of the country plus corporate sector put together. We have more foreign reserves than that. So that gives a lot of leeway to the policymakers, and it gives strength to the country's country rating and stability. When the rating agencies look at the country, they see this strength embedded in the Indian balance sheet. Just to give you an idea of how the Forex reserves have gone up. So despite COVID, see the kind of accretion to the Forex reserves. The RBI has done a really brilliant job in managing these foreign inflows and not letting the rupee appreciate too much because of these foreign inflows, and building the Forex reserves that India now holds. So much so that we are the fourth largest holder of foreign Forex reserves in the world today, which is a huge thing. And finally, a couple of slides on the broader economy. So we covered the GDP growth and outlook by sectors. We looked at the fiscal deficit, the balance sheet of the government. We looked at the inflation. We looked at the external sector. And we'll end with a couple of other slides. One is on COVID. Nearly 70% of the population is already vaccinated. 93% with the first dose, and second dose also is huge. Nearly 70% has got 2 doses. And that number has gone up in the last 15 days since these slides were published. So as of today, we are at 167 crores. So 10 crores more have been added in 15 days. You can see the run rate, which is so highly commendable and the highest in the world. The first dose, nearly 91 crores have got, and second dose 66 crores. And that covers nearly 70% plus of the population is now fully vaccinated. Social infrastructure and employment. Expenditure on social services by center and states increased from 6.2% of GDP to as much as 8.6%. And if you really see the map of India, it's a real, we are really seeing a huge shift with a lot of basic services now available to nearly the entire population, except for a remote, inaccessible areas which are still left. Swift recovery in labor market indicators, recovery in employment in urban sector to pre-pandemic level. Recently, the CMIE numbers also showed that unemployment has fallen to about 6% now. Jobs formalization continued with a lot of the workers now covered under government welfare schemes, as well as the Provident Fund organization, which creates retirement funds, which holds the retirement funds of formal sector workers, as well as creates scope for their pensions in the as defined contribution pensions for them in their retirement. Increase in allocation of funds to the Mahatma Gandhi rural employment generation schemes, where public works are undertaken and labor is given daily employment in all the districts of India. Huge amount of money has been spent there to ensure that people who lost jobs, who were unemployed, who had gone back to the rural areas, could get employment through public works that the government undertook under this scheme. Improvement in social indicators such as fertility rates, sex ratios, the social indicators have also been moving up. Center's support to the state, so the center collects all the revenues for the government and then transfers to the states. Enhanced limit of borrowing for the states has been created. Loan to states in lieu of GST compensation. In fact, this budget also nearly 1 lakh crores, 100,000 crores, 1 trillion rupees has been sanctioned as 0%. So interest-free loans of 50-year duration to states as another buffer from the center. Scheme for special assistance to states for capital expenditure. We covered how the state's capital expenditure has increased by 60% plus. The center has been funding a large portion of it. Coming to agriculture and food management, the focus is towards looking at allied activities like poultry farming, animal husbandry, dairy, fisheries. Develop and implement small holding farm technologies to ensure we improve the productivity. Prioritize crop diversification. What we need is oilseed production to go up because that's a big import basket for us. Pulses have been largely controlled by the government by very efficient policies, and horticulture, which can be then exported out. Coordinated action from state governments needed to facilitate shift to high value and less water consuming crops. So, very high water consuming crops are actually, you're giving a subsidy to the consuming nations by using your water resources to grow crops which are eating up a lot of the water resources which are very limited in the country. Increase in agriculture R&D, so a lot of research, use of alternative fertilizers like nano urea and organic fertilizers, natural farming and organic farming is being encouraged. Focus on new technology, including drones. In the recent budget now, separate budget has been created to facilitate the use of drone technology for farming, and AI-based decision support systems on the monsoon forecast, the weather forecast, the soil moisture content forecast. Support startups for innovations. Food processing is very critical. Still a lot of the food in India is wasted. Supply chains, cold storages, and export hubs all are being created, which will help the rural economy immensely. So that is about it for the economic survey. A lot of data, about 440 pages. I have summarized it for you in about 33 pages. I hope it was useful for you. And if you liked it, please press the like button. Do subscribe to my YouTube channel if you like this video. I've done this in English. I will now spend time in doing this in Hindi so that you don't face the issue of hearing me twice on the same subject. Please write other subjects that you would like me to cover. I have a very busy day, so I'm slow in making these videos, so please put up with me. I'm trying my best to catch up and send you more videos. Do send me what subjects you would like to cover, and I hope you found this useful. Thank you very much, and all the best to our dear India, all the best to all our dear Indians, and we hope the world conquers this COVID fast and we get back on the path of economic growth, and we see that poverty alleviation again works very strongly, so that nobody is left behind as we grow fast. Thank you. All the very best.